Huge earnings day for asymmetric investing. Alphabet just reported their numbers for the quarter. The conference call hasn't even started yet, but I wanted to get a quick video out with my initial thoughts because I think this was an absolutely phenomenal quarter. And this is why Alphabet is the #1 holding in the asymmetric portfolio on AutoPilot. It's also one of the biggest holdings on the asymmetric portfolio in the newsletter. So if you want more on both of those, I'm going to put links to those in the show notes. But the reason that I have been so excited about Alphabet, I just think this is one of the underestimated companies in technology today. They have a vertically integrated business model. They're developing models. They're distributing those models through all of the areas, all the touch points that they have with consumers, everything from search to Google Drive to YouTube. They're all using all these artificial intelligence models. On top of that, they're building their own cloud. They're building TPUs. All of this stuff is in very, very high demand. And Google and Alphabet is a phenomenal beneficiary. I want to get to the numbers, but before I do want to remind you to sign up for Asymmetric Investing. Like I said, link on the screen and a link in the show notes. There's a ton of options for you there. You can follow my Asymmetric Investing portfolio that I built from zero and built that to beat the market. I buy stocks once a month. And then there's also the Asymmetric Portfolio on AutoPilot. That's where it is completely passive. You just follow the Asymmetric Portfolio. Really cool technology. They started that with the Pelosi tracker. Now you can track people like me as well. So I'll put links to those in the show notes. And I also want to thank this video sponsor, Fiscal AI. I'm actually just going to show this right now. Fiscal AI showing you the after hours move. This is down just a little bit, but look at this. They already have the numbers for the third quarter. I am recording this right now, started recording at 3:11 Central Time. So about 6 minutes after earnings came out, they already have their numbers in. So if you are a serious investor, you want to get on Fiscal AI, go to fiscal.ai/ASYM. You can try it out for 2 weeks for free. I'm on the enterprise version here. That gives you 20 years of data. But if you like what you see with Fiscal AI, and this is a product that I pay for, so putting my money where my mouth is, you can get 15% off with that link. So just one of those tools I think everybody should be using. Let's go to some of the high level numbers here. And I'm going to do trailing 12-month numbers. And we won't go back 10 years. We'll go back to March 2022. So you can see here steady growth. The growth rate over the past 12 months, 13.4%. If we look at this on just a single quarter basis, that growth is accelerating over the past couple of quarters, 16% in this most recent quarter. So I'll show this in the presentation in the actual earnings release, but I just wanted to give you a visual of just how quickly a company at the scale of Alphabet is growing. Just incredibly impressive what they're doing. And this is everything that they have built over the past 25, almost 30 years, really coming to fruition. I'll start with this part of the income statement from the release. Revenues grew 16%, cost of revenues up 13%, so their gross margins did expand a bit in the quarter. They did have a higher expense right here in general and administrative for a fine from the European Union. So that's where that's going to show up. That's why you're going to see their net income maybe not be quite as impressive, and operating income as well without some of those adjustments. So just think about that when you're looking at the quarter. Here are the Google services segments. So this does not include Google Cloud, but what Google does is they have Google Search, that's in the dark red here, that was up 15%. So this is, again, accelerating from the growth that we had even when ChatGPT came out. So everything that you hear about ChatGPT disrupting Google's business, we're not seeing that in the numbers. I just want to be super, super clear about that. That is absolutely not what you see with a company at this size, this scale, growing 15%. The other piece, YouTube, also growing about 15%, another advertising business. So this is showing you search not losing business while YouTube is growing. If you saw YouTube growing at 15% and search was growing maybe at 8%, maybe you would see a little bit of disruption coming from some of those chatbots and things like that. The one negative is the Google network. That's the little ads that you see all over the internet. This is not a big surprise. Just want to be clear, this is a business that has been in slow but steady decline over the course of the past few years. I would expect that to continue. So don't be surprised that this is a negative. And then the big one is subscription platform and services. This is going to be everything from Android to the subscriptions that you pay for maybe your Google device or your Google Drive if you have like a corporate account or a personal account that you pay for. That's where this stuff ends up. It's kind of a catch-all, but it is a lot of the distribution points that they have for artificial intelligence. So just keep in mind that AI is going to show up in here and some of the tailwinds that they have. And then you see the growth in operating margin. Operating margin is going to include those costs associated with that fine in this segment. So that's where you're going to have a little bit of the disappointment. Would have been about $3.5 billion higher here without that fine. So that would be a really, really solid margin, not seeing any real margin pressure long-term in the services segment. The cloud is really where investors are going to be focused, are going to be focused this quarter. This is what you're going to see with all the headlines. Cloud grew 34%, 33.5%, and they had a nice rounding up to 34%. But look at the increase in operating margin as well. Operating margin now 23.7% over the past quarter. This is a business that just became operating income positive a couple of years ago. So now you're really starting to see the pricing power that they have, the demand that they have for artificial intelligence in particular, the demand for TPUs, everything that they're doing in the cloud is showing up in this. So this is really going to be the standout for Alphabet in this quarter. Capital expenditures, no surprise that they're on a massive, massive run rate. $85 billion is what they're expecting to spend this year in CapEx. And that's up 83% from a year ago, so about $24 billion in this most recent quarter. But look at this. Even after spending that much on capital expenditures, they still have an extra $24.5 billion in free cash flow. If you have watched any of my videos, you know that one of my thesis with Alphabet as an investment is they are not going to lose in artificial intelligence because they are going to be able to bludgeon the competition with this cash flow. OpenAI cannot compete with this. Oracle cannot compete with this. Even Microsoft. Microsoft is a huge, huge company. They don't have the same incentive to power OpenAI. That's really their biggest partner, but they're now not their only cloud partner. Actually, Alphabet is one of their cloud partners. So they don't have the same benefit, the same cash flow from artificial intelligence that Alphabet does. If they want to win in AI, they have more money to put into it than anybody else. They have more distribution points than anybody else. And we're seeing that in these cash flow numbers. The other thing I wanted to highlight, $11.5 billion in this quarter in repurchase of stock. That is down a little bit from a year ago. So they are pulling back a little bit on repurchasing their stock. Obviously, they're investing that in AI and all the opportunities that they see there. But look, at the end of the day, this is one of the biggest companies in the world that is accelerating its growth rate. It's expanding its margins in its most important business, Google Cloud. Phenomenal growth in that cloud. We're seeing everything that they've been building over the last few years, really the last decade in artificial intelligence, start to come to fruition. Yes, there's a huge opportunity for a lot of companies, but Alphabet is one of those companies that I think is still underestimated by the market. Just a couple of months ago, it was trading for a teens price to earnings multiple. You don't usually get that for a company that's growing revenue at 16%, but that's exactly what you have with Alphabet. I still think this is an extremely undervalued company. I still think the opportunity ahead is absolutely massive for them. And this is the one company that just kind of ends up being a no-brainer, I think, for investors. So let me know what you think about the quarter from Alphabet. I will be back here and on the newsletter with more about this quarter as we get to the conference call that has not started as I have started recording. So we'll get a little bit more information over the next couple of days, and I'll definitely be covering that there. But like I said, this is the biggest holding on the AutoPilot asymmetric portfolio. There's also one of the biggest holdings already on the asymmetric portfolio that I follow for the newsletter that is crushing the market over the past few years since that began. So I'd love to have you as part of that community. Let me know if you have thoughts or comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.